Bubble bath, call my name. Every morning up with the sun. Bubble bath, bubble bath.
Tips for sustainable wealth every Friday 17 UTC by Fluffy and Alex. Who can fetch data from the real world to the magical world of blockchain? Better, faster, securely. A big inspiring project. The Graph versus the contender, a unique technological wonder, API3, that has yet to prove itself through time. Which has the better upside potential, which one to choose for the long term, and the most recent news and developments to help us choose wisely and make us money. Alex, back to you.
Let's dive in. Hello guys. First, let's start with price performance, or which crypto would have saved us or made us more money. Both projects became available to the general public almost at the same time in December of 2020. Since then, it seems API3, the orange line, has outperformed the Graph. Get this, if we invested $1,000 in December of 2020 into the Graph, we would have only $350 by now. Bear market hits hard, I guess, as does massive token unlocks you'll see in the Tokenomics soon. On the other hand, if we invested the same amount for the same time period into API3, today we would have the same $1,000 invested in our pockets.
That sounds interesting.
Guys, if you enjoy our crypto battles, check our previous video on Axie Infinity versus Star Atlas. Suspicious things happening there with Tokenomics. Just click at the suggest video at the right
top corner.
Now, let's have some fun with Tokenomics. Which one to choose for the long run and which is undervalued. The Graph has almost 7 times higher market cap as API3 is valued at $110 million. There are 7.4 billion GRT tokens circulating out there and 66.8 million API3 tokens comparatively. Although CoinGecko and other sites that state that they have maximum supply, this is not the case in you will see soon. Total supply for Graph is 10.05 billion GRT, and for API3 we have 115 million API3 tokens issued. So 74% GRT of the total supply is already out and 57% API3 tokens comparatively. This means that if all the tokens were unlocked, the Graph would be worth $980 million. Not a big difference for now. API3 though would be worth 2 times more. So knowing how fast the rest of tokens will be unlocked is crucial, as new tokens can be sold and price can go down. Inflation rate per year for the Graph is 12.7% and 35.5% for API3. Acceptable numbers for both. The Graph is better for now. As stated, there is no maximum supply and the Graph has newly issued tokens for staking rewards at 3% inflation rate per year. Combine that with the unlocks of the existing pre-mined tokens, and that's how we got our 12.7% inflation. Notice though that massive unlocks have already happened in 2021, so moving forwards we should be good. One positive thing to pay attention to is that the Graph has burning mechanisms that potentially can grow to make the project deflationary. Till this day we have seen 22 million GRT tokens burn. If the network grows, the burning will become much bigger. For now we have 2.9 billion GRT tokens staked in the network. This represents 39% of the circulating supply. We definitely want to see a bigger number. Comparatively, API3 has 84% of the circulating supply locked in staking. Besides for distributing API3 token rewards for doing so, the purpose is to have a coverage staking pool to hedge for potential financial losses from malfunctions when fetching data. API3 has similar tokenomics to the Graph. Till this day, there has been created 50 million API3 tokens from the staking rewards, which is quite a lot, I would say. This might be the reason that at some point API3 changed the staking model. Now they target a specific number that should be staked, which means at this time we have 4.2% inflation per year for the newly created tokens. This combined with the unlocks for pre-mined tokens gave us the total inflation rate that we saw at 35.5%. Here we also can observe similar burning mechanisms. You either burn a portion if you want to use the services, or if there is an excess revenue, API3 tokens will be bought and burned from the market. Looking at the transactions of the token on Ethereum, we can see that $875,000 have been transferred in a day in API3 tokens and $15.3 million in GRT tokens. So it seems the graph is doing better here, as NVT ratio or transactional value compared to market cap is 48 for graph, which is pretty decent, and API3 with a figure of 127 is a bit overvalued based on this metric. I think I lean slightly towards the graph here. What do you choose, guys? Tell us in the comments. Now, to decide and finish the debate though, let's check recent news and development in our Commendatory to understand where those projects are going. At this point of time, the Graph protocol is in the process of migrating its thousands of subgraphs from its free hosted service, where it didn't even make revenue from query fees, to its decentralized mainnet. As of Q2 of 2022, the hosted service supported over 24,000 subgraphs, and on June 13th of 2022, there were 392 active subgraphs on the decentralized mainnet. Today, as we can see, this number has surpassed 500 active subgraphs. As soon as this process started earlier this year, the project saw increased interest, and the active subgraphs on the mainnet, as we already saw, keep growing. This has a positive effect basically on every metric. For example, the subgraph revenue fees have skyrocketed, and logic says it only is going to go up. We see a steady participation of indexers, delegators, and curators. Rewards to the first two groups who validate and secure the network has gone up, and the staked tokens in the network have increased in the last 6 quarters. Can GRT reach new highs? It seems like a realistic expectation at this point, although the growth network metric has declined since September 22. Another positive thing is that the Graph awarded $26 million in grants in Q2 of 2022 to develop the ecosystem. So, except for the migration process to this decentralized mainnet, there are other key points to look for, such as streaming fast is building a tool that will increase indexing speed up to 100 times. Messari is maintaining and developing more than 200 standardized protocol subgraphs and the capability to index RWIF as a storage file network. So Cosmos Hub integration, which marks the third non-EVM network on the Graph protocol, and the beta integration with Arbitrum adds support to another EVM compatible chain. And the most recent addition to this list is Gnosis chain that happened in August. On the other hand, API3 has its AirNode system deployed on 13 chains, which are EVM compatible, such as Ethereum, Optimism, BNB chain, Gnosis, Polygon, Avalanche, Arbitrum, Moonbeam, and more. AirNode is the protocol layer that API Web 2 data providers can use and deploy themselves without intermediaries. This is the innovation that API3 brings to solve the Oracle problem. This technology is unique to API3. If it proves to work like a charm, API3 might see great adoption. And we can see some signs of adoption, like in June, AccuWeather announcing it will deploy an AirNode to bring weather data directly to the blockchain. In May, OpenFabric announced they will be using API3. Staked API3 tokens seems to be stable around 60 mil tokens since July 2022, which shows signs of conviction from investors and ecosystem participants. The latest AirNode version was released a month ago, and from a security standpoint, it is considered to be the golden standard. API3 aspires to be a fully autonomous ecosystem which is governed by the community, and as we can see from the roadmap, they already launched authoritative DAO. So all in all, API3 is a promising Oracle project that it has the potential to capture some value from the King Chainlink. But till this day, we haven't seen massive adoption going on, and it remains a high-risk play. Definitely we could consider investing a small amount for the long term, but I consider it to being for the short term, as the upside potential is bigger than the graph as it is a smaller project. But personally, I would say that API3 is the one to be for the short term. The graph is for the long term, as the graph protocol has a lower inflation rate and the majority of tokens have been unlocked. Massive unlocks are in the past. We can see actual network growth and adoption. If more subgraphs going to migrate through time, we can expect an upside pressure for the GRT token. That's my opinion and not financial advice. What's your opinion, Fluff?
We will see. A Messari report reveals that API3 protocol use case sees by stating that API3 allows data providers to run Oracle nodes themselves, thus eliminating middlemen. Due to no middlemen, data providers can no longer remain anonymous. Instead, they are accountable and may face repercussions should inaccurate data feeds be delivered to consumers. API3 differentiates itself from existing Oracle solutions in two ways. First, it provides full transparency in terms of data feeds provisioned to consumer. Second, it offers on-chain service coverage in the event of API malfunction. I am wondering, does Chainlink do that?
I don't know.
Quant Platform and API3 announced a partnership to integrate quantum-resistant smart contracts with API3 oracles. Is API3 looking into the future, or is it too early? Time will show.
We will see.
Quant Platform is a quantum-resistant layer 1 hybrid blockchain platform that allows developers and enterprises to build quantum-resistant smart contracts, dApps, DeFi solutions, NFTs, tokens, metaverse apps, Web3 technologies, and on top of Quant Platform, we know that it supports any programming language. Not impressed yet? Time will show again. Let's not be too optimistic. API3 also announced a partnership and integration with our favorite Cadena, a blockchain platform known to be of high throughput. Cadena will be making API3's data available to developers using their platform, and API3 will assist where possible sourcing data from them. API3, an Oracle provider and decentralized autonomous organization, has announced a 10-year partnership with the Open Bank project, the leading open source API provider for the banking industry. The partnerships will connect 400 banking APIs with the Web3 world. On the other hand, the graph is an indexing and query layer of Web3. The graph characterizes itself as the Google of blockchains, provides ways for blockchain-based apps to collect and interpret on-chain data. Developers can build and publish open APIs called subgraphs, and applications can query using GraphQL, a very well-known mature technology. The Graph on August unveiled its plans in preparation for the next phase of growth. The blockchain network rolled out a new program called the Migration Infrastructure Providers Program. The Graph network is growing to support new chains over the next 6 months. Now, Alex, both projects deserve a place in my portfolio. Both projects attracted my attention due to interesting use cases. Both projects are direct competitors to a certain extent, and I would say that Graph for the long term and API3 for the short term.
I see. Interesting stuff. Now, thank you for watching, guys.
Thank you for watching our crypto battles, and if you want to support us on YouTube, please like, subscribe, share, and comment below. What do you like? More API3 or the Graph? Thank you. Till next time. Bye.
Bye.
Call me a